Hey everyone, and welcome to the Plant Stock channel with me and Mayur here. We're going to take a look at the latest earnings from the very good food company, Very My Berry, that I've been talking about on this channel for about 1.5 years now. So we've been waiting for this for a long time now to find out how well or how badly they've been doing now in 2021. So first of all, you might not know Mayur. So Mayur, you want to introduce yourself?
Hey guys, I'm a personal investor. Love plants, plant stocks. I'm a vegan myself, and I work as an analyst for a company called Zacks Investment Research, which does financial research for in the stock market.
Awesome, awesome. Yeah, and before we just get into this, just some quick disclosure here that whatever me and Mayur are talking about here, it's not financial advice. It's just two friends talking about a stock that, yeah, that is interesting to talk about, basically. So again, not financial advice. It's important to really keep in mind here. But also want to just give you a heads up that Mayur normally focuses on the most interesting stocks. I would say for you is Tesla, Beyond Meat, Oatly, T-Doc, Square. My understanding is, if yeah.
Yep.
Yeah, and he hasn't. I don't think he's really followed the story of the very good food company before. I asked him, should we just take a look at the finances together? He's a real numbers guy. So I thought that it's good to have someone with a nuanced perspective, right? That hasn't followed the growth story, that hasn't been affected by all the hype, right? So just some fresh eyes here. And obviously, that is both good, but maybe bad in some ways that he doesn't have all the story behind it, maybe not all the details. So, again, just focusing on the numbers here and some things that does seem interesting. All right. But if we then maybe just start looking at their results. Guys, just before we do that, realize that the actual earnings call hasn't been out yet. It's coming now on April 5, on Tuesday next week. So we'll get more details then from the management team, of course. But if we start looking at the Q4 results and uh, and then the 2021 in total. So
It
uh,
looks it looked pretty good. There are a couple of good things that I kind of took away, and like you said, this is completely new to me. So, fair disclosure, this is the first time I'm even looking into VGFC. So it's kind of my initial impressions
yeah,
from the annual report that they just published.
yeah.
So it looks like they had strong growth across all their channels, right?
Yeah.
They have the e-commerce channll,
Have you shared your
174.
screen, by the way?
Yeah, I just have a couple of sure. Yeah, let me just do
Yeah.
that here. I just wrote some bullet points, from the call,
Yeah.
and there's the good and the bad. So let's start with the good first.
Yep.
Um, which is again strong e-commerce growth. 174%. That's their main revenue driver, which delivered about $9.2 million for the full year 2021. Wholesale growth at 189%, even better growth. That's driven by distribution at Whole Foods, Thrifty, Wegmans. Wegmans is huge here in the Northeast U.S. It's a massive store. They may not have the most number of stores compared to like Whole Foods, but it's huge. Like the size of these, stores are massive.
Okay. So a lot of
And then food
possibilities.
service. Yeah, exactly. And then food service, 24% growth, which is not bad considering they didn't really have too much. At least, correct me if I'm wrong. I don't think they had a whole lot of restaurant expansion. Is that right?
No, no. Just I think they might have two restaurants at the moment.
Okay.
So yeah, someone
Yeah. So
in.
that's good that grew, despite not increasing the number of locations a whole lot.
Yeah.
So that's good to see as well. And then there's also another part of it which is impressive, which is gross margins at 38% in Q4, 28% for the full year. That
Yeah.
basically beats out everybody. It beats Beyond Meat, it beats Oatly, it beats everyone that at least I've been tracking within the plant stock world. And that happened, they said that it happened due to operational efficiencies on the ramp of, and I didn't finish the sentence, but one of their factories.
Yeah,
I
probably Rupert
forgot
facility.
which
But yeah, but I think it's also, and that's really good. I mean, 38%. I was also surprised there. But I think we have to keep in mind that majority of their sales is from e-commerce, right? So and they're actually looking to switching that around because they have been, I think, about something like 80% of their sales before, anyways, has been from e-commerce and 20% from wholesale. But their hope was, and it was supposed to actually happen in 2021, that was going to switch and it was going to be in stores instead. But that doesn't seem to have switched very much as of yet. So I'm thinking it's probably easier to get those margins down when you're actually selling it through e-commerce from your restaurant, from your facility. So I don't know what you think about that.
Yeah, it's good that they're having this because this is something that I don't think Beyond Meat, at least I'm just using Beyond Meat as a comparison here. I don't think that they have a terrible amount of their sales coming from e-commerce.
No, no,
So that's actually an advantage of VGFC because the more that you have digital sales, the easier it is to process, the easier it is to accommodate. Just get in front of more people, right? The greater the number of impressions that you're able to give to people, the better in terms of your distribution. So e-commerce is actually really good, and I'm surprised Beyond Meat has not been able to tap into that as much. But that's good to see for them that they're doing this, right? So my initial impression is that it's a plant stock that doesn't really have that has a business model that's actually quite impressive compared to the business models of other plant stocks like Tattooed Chef, for example. They do have e-commerce, but what's different about VGFC, which I really like, is that they also have restaurants. And that's one way that I think they can differentiate themselves because as of right now, there are no national, restaurant chains that are fully plant-based, at least not in the US. So that's an avenue that could have some potential. Maybe it's just limited to the major cities, but even right now, despite having large vegan and vegetarian populations in major cities, in the US, we don't have a national, plant-based restaurant chain. So maybe VGFC could be that company that is able to do that.
yeah, they have plans actually to open up. I think around 10 restaurants with time. They had those plans before, anyways, before they started to downsize, which we can talk more about later. But that they would have these flagship restaurants a little all over North America, but also with time internationally, that people would actually get to know their brand and get to really get that experience and hopefully go buy in the stores later. So, but I don't think they were thinking like, oh, we should have hundreds and hundreds of restaurants. But still, I mean, it's would be a good beginning in that way.
Yeah, yeah, exactly. Exactly. And I think they could also do a little bit on marketing, but again, we'll get into the financial a little bit later, but this is a business model that I think is actually quite attractive, right? Just the business model itself. I like the fact that they're heavy on e-commerce. I like the fact that they're getting distribution at major retailers like Whole Foods and Wegmans. And I like the fact that they're also in restaurants. What that does is that it preserves, margins, and that's why we see these gross margins at 38% in
Yeah,
Q4,
yeah,
28% for the full year, and growing. Because food service, if you sell your product to another restaurant, those margins are very bad, like what we see with, Beyond Meat relative to their retail. But if you own the restaurant yourself, you can get some pretty good margins, assuming that, you're getting full, production out of each restaurant,
yeah,
right? And so that depends on, where you set up. Obviously, plant-based probably won't work in like, small like Midwestern states in the US, which is mostly meat eating. But it could definitely work in New York City. Um, Definitely could work in many cities in California,
Yeah.
in LA especially.
It's really a
So
cool name also. I mean, the Very Good Butcher. I mean, it is a interesting concept, which I'm
yeah,
thinking that people might not think about that from the start, that it's vegan. It's like, okay, it's different. Yeah, attractive branding.
yeah, exactly. And I was actually I haven't even finished typing up all my points yet, but that was something that I also took away.
Yeah,
And this is again my first impression of VGFC. I've never looked at them in any level of detail before. But the first thing that I kind of noticed is that they do have a pretty good brand in terms of just their packaging. I think their website could use a major overhaul because I've had to click multiple times just to get to the ordering page, for example.
yeah,
I think it should be a lot simpler than that. So their website should definitely get an overhaul. But in terms of the packaging of their products, it looks good to me.
mm,
If I saw it in the stores, I'd probably look at it and probably pick it up,
yeah,
just as a plant eater myself.
mm,
I don't know about the masses, but I think it does have some appeal because of their use of the word butcher,
yeah.
and having those butcher knives as a part of their logo. I like it, right? And the products themselves look appetizing. I think
And,
they've done a good job with the products and their packaging.
and I think that's
Website.
like Mayur asked me, because he hasn't been following the story before, right? That maybe I'll just add some things as we speak about this. Also, for he's coming with the numbers, and I'm coming with the stories behind it. And it is, when you look at Instagram, they're really big on Instagram when it comes to social media. Also, it might be why they're doing so well with e-commerce. They have about, I think, they're closing in at 100,000 subscribers on Instagram, which is very interesting, because considering how small they are as a company, right? Because if you look at Tattoo Chef, I think Tattoo Chef, which is a much bigger company, but they're below 40,000 subscribers on
Mhm.
Instagram, and when it comes to Beyond Meat, it's about 1 million. So they're 1/10 of Beyond Meat, and I think that's pretty impressive considering the scope of Beyond Meat.
Yeah, they've got some really good swagger with social media, so that's really good to see. Um, so this overall approach I like, right? Just conceptually speaking. But then once we get into the numbers, it gets a lot worse after that. So that's the good that I kind of took away from. I like their business model. It's very impressive growth, good gross margins. Again, that reflects their business model being in food service, like owning the food service outlet rather than selling it to other restaurants. Um, that limits their total distribution, but it preserves their margins. And I think for these small startups, the goal is to halt cash burn as quickly as possible, right? Because you only have a limited amount of money. And so that's kind of where the good ends and the bad begins.
Yeah,
So, the bad. So there's a couple of red flags that, we can see here.
yeah,
Um, so they recorded, a 2.4 million and, $1 million impairment of goodwill. So this happens because when you buy another company, you record the total amount of cash that you paid for it, plus a premium on top of what their fair market value is.
right.
That's what we call goodwill, that portion that's above what their fair market value is. And so they said that we're going to start to impair that now. So that happens when what you thought you paid for it is not actually what those companies are worth. So the goodwill is what they're worth, assuming a number of things that management said when they purchased those companies.
Yeah,
So such things as synergies, for example, that's usually the number one reason why companies acquire other companies, is because there are synergies, or because of organic growth, or both. Um, and so they came out and said, well, the synergies that we thought we would get are not actually panning out. So now we're going to charge a goodwill impairment, which hits your P&L. Now, this is not a cash expense, so it doesn't drain your cash. So that's a good thing about it, but it kind of brings into question management's discretion, right? what was the thinking that went into buying these companies? This company called Cultured Nut and Lloyd James for
Yeah.
2.4 million and 1 million respectively. So my big question is, what was the thinking behind it? And the first thing I start to think of is there some conflicts of interest? Did either of
Well,
these companies have owners who are friends or relatives with management?
my understanding is that when it comes to the cultured nut, uh, it's also a localized Canadian company, vegan cheeses. Then I think they're based on cashews. I could be wrong on that, but basically they had been selling their products in their butcher shop before, and then they felt like, well, if we acquired this company, we could sell it under our brand, right? The very good cheese. So basically, created some form of sub company, but part of the overall very good food brand, right?
Hmm.
So I'm thinking they were hoping that that could help them in the future with even more, moving into another sector, which would be the dairy sector and cheese sector, and in that way. And I think Lloyd and James, I think that's some form of could be wrong, but marketing company there. So that they thought it would be a good idea to own that themselves, so they could control that. But
Hmm.
yeah, but again, I haven't looked into those for like over a year now.
Yeah. So I would just look into that. I mean, maybe it's a genuine mistake, and that could be very well the explanation that they just didn't get the synergies that they expected. But welcome to penny stock world, everyone. These are very, very small companies, and because they don't have the level of shareholder pressure that big companies have, right? They don't have institutional shareholders. They don't have sophisticated investors, right? They don't have anyone that's going to seriously question them or at least be in a position of a hostile takeover if management is appearing to be, um, appearing to be just negligent, right? When you have much bigger companies, you have activist shareholders that can take 10-15% stakes in your company and therefore have an influence.
Yeah.
I don't think, small retail investors that are in this company have 10 to 15% stakes in
No.
this.
No.
Um, and most investors, I don't want to sound arrogant, maybe there are some really, really good investors out there, but most small investors are not really understanding, the nature of business, and, they look past cash burn and other cold, hard realities of business,
Yeah.
and they just look at the product and like, oh, this is the next big thing. Oh, they look at their growth. Oh, this is gonna sell like crazy everywhere. Well, there's a lot of competition out there, and this is a company that has to respond to market forces.
Yeah.
And
I mean, yeah, there was a lot of promises when it came to how many locations they would be sold at. They were supposed to. They started talking about in April, May last year that by the end of 2021 they should be at least around 3,000 new stores. And we were noticing, back in August, like there were just around 500-600 places or 800 places then, and it didn't seem very likely. They ended up at about 1,400 places, or below 1,400 places, I think. But so a lot of over promises, definitely.
exactly,
Yeah.
yeah. So some over promises. Again, we can probably chalk that up to just difficulties in ramping. No business is easy. We get that.
Mm.
But when management over promises and and it's not just one thing. It's when there's multiple things, right? There's this impairment of goodwill. They didn't get the synergies that they expected. They didn't get to the 3,000 stores that they promised. Then there's this issue where there's a huge step up in SG&A, right? So we saw a huge growth in revenue, which is awesome,
Yeah.
but we saw even bigger step up in overhead expenses, right? And okay, we can say, all right, fine, that we see in Beyond Meat as well as Oatly too. But if you look at that, right, they had $1.8 million in wages and bonuses for executives. So, that's another red flag. Why are they taking such huge pay
Yeah.
when they have record cash burn, and they didn't execute well with regards to these acquisitions or their target of 3,000 new stores. What did they achieve in 2021? In terms of those promises, right?
Yeah.
Then there's also the bizarre CEO loan situation.
Yeah.
Where the CEO loaned, I think it was $750,000. Was it?
Yep. And then his co-founder about 500 Canadian
Exactly.
dollars.
Yeah.
Mm-hmm.
Yeah, you can see that here, and I'm glad. So this is one. I should say that this is one good thing about the company, is that this presentation is actually quite detailed for such a micro company. So that's good that they're at least disclosing a lot here.
Yeah.
Sometimes you won't even get that, but again, that goes with a Nasdaq listing, right? You got to do this if you want to be on the Nasdaq. So there's this situation where the company entered into loan agreements with the CEO.
Yeah.
For 750,000 and 500,000.
Yeah.
And then they were suddenly amended a week later. And they're like, okay, well, suddenly these loans are payable immediately. And for the CRDO, it's payable within 60 days. So why would they do that? Like, who does a loan and then suddenly requires repayment a week later? And they bear an interest of 9%.
Could that be the board that they felt like it wasn't an okay loan?
If that's the case, then where was the board just a week ago?
Yeah, because because the CEO, I think it's a couple of months ago now, he had to step down from the board because basically stating that he should focus on the business. But so I'm thinking probably there's a lot of things there that is not very popular with the board.
Right. Yeah. Right. So whatever the case, I just don't know. Like we would have to really, really dig into this, but from what they disclosed on here, they made a U-turn, and there's really no explanation as to why they did that. So suddenly the company had to repay the CEO the entire amount. Maybe the CEO came under a cash crunch himself.
Yeah.
And suddenly needed that money back a week later. And so they did disclose that they repaid them as of December 31st, right?
Well, only the CEO paid back the loan.
Right, the CEO's right. That was repaid in full, but then
it's still about 400,000 for this on the CRDO. Yeah. So, but I think the weirder thing is because a lot of investors, they've been really upset, obviously, regarding these loans, and that they were supposed to be paid back. I think actually both of them in December, and then they had the option to pay them back up until January. Yet there was no conversation about it, no discussion for months and months. All of a sudden they stopped talking. Basically, the company, from basically every week, like 1 or 2 news items coming out of the company for almost a year, and I covered them all basically. And then really quiet after this situation and things, with the whole market going down as it did. But the weird thing is also that when I saw now that he actually paid it back, the CEO, which is really good, right? Why didn't he mention that? Because that would have calmed a lot of investors. Because so it didn't make sense that first they mentioned that they're going to take this loan, and then after, when he actually does pay it back eventually, I'm not sure if he was pressured or what, they don't mention that. That's kind of weird.
Yeah, that's very, very fishy. That type of lack of disclosure, at least on on the call, it doesn't make any sense. No. So clearly they don't want to talk about it. No. Right. So that's not good to see. It just see, all these things accumulate. Like, they're not big deals. It's probably not fraud, to loan the company money and then suddenly require the money to be repaid, as long as it's done legally by amending the terms of the agreement, which it looks like they did. Nothing illegal, but just fishy. These are just really bizarre behaviors. And that too, it's also interesting that they did this right after they issued an equity offering, right? Yeah. They did do an equity offering in November.
Yeah, they mentioned. I think it was in the middle of October and the end of October, something like that.
in October. Right,
Yeah, yeah,
exactly. So it was just a month after doing that, and suddenly the CEO says, here's $750,000." Well, I mean, for a company that's burning, millions and millions of dollars, what was that even going to do?
yeah,
What was that $750,000 going to do? And that too, right after issuing equity that the company raised additional cash at over $2 a share at the
yeah.
time.
So
So these are just weird activities that's going on in here,
yeah,
and it's really a shame because this is a company that I think has potential. I wouldn't invest in this company just personally, um, but I would certainly take a look at it if they continued to show progress in growth and trimming the cash burn.
yeah,
um, and getting to real at least profitability at the adjusted EBITDA level,
yeah,
because that would tell you that there's progress with controlling costs and increasing revenue. That would be a great trend to see.
yeah,
Um, but they're just not, and they're too small. They're just too small to make it investable.
yeah. So
And this is what happens with small companies when there's not a whole lot of eyes and there's only untrained small retail investors. They don't have a whole lot of pressure to run things very, very efficiently or very, soundly.
yeah.
So that's just my initial impressions of what I see here.
But I mean, there's been a lot of talk, especially the last half year, that the management is quite inexperienced, and that many feel that, especially about the CEO, definitely. But considering what's been going on, but the funny or interesting thing is that in the management, the president and I think who is the temporary CFO right now, Anna Silva, she was actually the CFO for Daya Foods for 5 years before they got bought up by I think a Japanese company or something like that. So I mean, Daya, they were like at 27,000 locations in the U.S. or in North America. So that's a huge experience, just that. And she's the president, or she used to be the president of the company.
Mhm.
She came in like a half year after an IPO, and then quite about a year ago, they also acquired another person who's in the management. Uh, uh, I forgot his name right now, but he's been working for Amazon, and he's had different projects in Amazon for years and years, and executive positions at Amazon. So I would just, I don't know, imagine that these people, if they're in the management, that they would help the CEO here. Seeing like this doesn't seem kind of kosher. This isn't like typically how you should run a company. I'm not sure. That's just surprising to me.
Yeah, it's just really bad.
Mm.
Now I would keep an eye on this going forward, just because there's enough here for me to stay interested in following the story. I would be hands off of this stock for a while. Like I always tell people, like, look, sure, you can bet on companies like this, but why? Like, why do you want to? Like, there are so many great companies out there. Maybe not in the plant stock world, but there's Oatly. They're doing great. There's Beyond Meat that at least has scale, um, and has a product that can really shake up the world if they succeed.
Yeah.
And then there's other companies that are doing great things for the world. Like, why not focus on companies that are profitable
Yeah.
and growing rapidly at the same time?
Yeah. But I think it's also that a lot of the investors who started following this journey, I basically follow them since they IPO'd almost 2 years ago, and you get emotionally attached to some extent, kind of like you and me talked about Beyond Meat, right? That we both went into Beyond Meat around $135 or something like that. And today, thinking back about it and thinking about the huge multiples, that wouldn't make
Hmm.
sense normally today.
Right.
So, but
And that's
obviously
the other
that's a,
thing too.
mm,
Yeah, that's another thing too, is that, look, if you want to take a if there's nothing wrong with investing in small companies, right? But you have to be at least somewhat astute about valuation too.
yeah,
Like, you can't just buy stocks just because you think they're going to the moon. We have to be aware of valuation.
Mm.
And VGFC hit over $7 a share at one point.
Yeah.
It means that it was trading at like 100 times revenue. You cannot find one stock in the entire history of the US market, or any market for that matter, that has been a positive return for shareholders after hitting a multiple that high. Even half that.
What about
And
Tesla?
Tesla never hit multiples like that.
No.
No, not 100 times sales. No. And Tesla was operating in a vacuum, right? There was no companies that were building electric cars back then.
True.
And even throughout, for example, as recently as 2019, Tesla traded at 3 times sales. For a company like Tesla that created a new thing entirely that nobody else had.
Yeah.
VGFC is competing in a highly crowded market. Now, I do like their, like I said, I do like their business model, but you don't just buy companies at any price, right? Even today, they trade at, what is it, 10 times sales, I think.
No, right now it's 6 times. But it's because they've dropped so much, which is it's actually the most attractive that it's ever been, right? So I mean, not even close. But
yeah, and I wouldn't buy it at 6 times sales either.
No.
Like, again, like if you look at companies historically, companies don't trade at 5 to 10 times revenue, unless if you are a high margin, software company or very profitable, like for example, AbbVie, which is the world's leader of oncology and immunology drugs, rheumatology. Their net profit margins are 40%. Not gross profit, but net margins, right? That's why AbbVie trades at 6 or 7 times revenue.
Yeah.
But at the net profit level, on a PE multiple level, they trade at 12 times earnings, right? Which is very cheap. So you have to have very high margins to justify, even a 6 multiple to revenue.
Yeah.
Software stocks trade at, multiples like that. But that's because they have gross margins of 70% or more. So, again, even at this price, I wouldn't touch, given the risks of VGFC, given the cash burn that doesn't seem to be stopping.
Yeah.
Given the very shady behavior of management, even 6 times revenue is way too high.
Yeah. Yeah.
And given the illiquidity and the fact that it's, unproven in a very crowded market, I wouldn't touch this until it gets to, 15 to 20 cents a share.
Yeah.
And even then, I would want them to do a forward split so that it doesn't stay in penny stock world.
Yeah, there's talk about reverse split, or people are wondering.
They would have to do a reverse split.
Yeah, which would be negative, obviously, in the short term.
Yeah, because people don't like reverse splits because it tells you that, the stock price is just going south and management just wants to hide that, right?
Exactly.
But they would have to do it because, you're not going to get major buyers at under, a certain price, at least under $1, definitely not under $1, and usually not under $5.
No, and that's another problem, of course, when it comes to delisting, because they have, I'm not sure if you've seen that, but I think it's 2.5 months now. They've gotten a warning now from, they went on Nasdaq, I think it was, in October. And that was a goal for them for over a year to reach that level, and all of us were cheering about that. We're happy about that. Like, finally, they're going to get so much more attention, and hopefully institutional buyers. And they started getting very few ones at the moment, but very little. I think they're up at 1 or 2%, something like that. But and then eventually, when they did the dilution almost directly after, which didn't feel smart. And some of us obviously are wondering, like you said, it was up to $7, and it went down to $6, $5, $4, but we're trading there for like a half year or a long time. Why didn't they do a dilution then?
That is a great point. And they did it, which is good, but it just goes to show that, management really doesn't understand valuation either.
No.
If your stock if the market is giving you, even 20 times your revenue,
Yeah.
you got to dilute. Like, you have to dilute.
Yeah. But it's
Um,
also interesting that that their CFO actually quit a couple months ago, and the president Ana Silva, who then is a temporary CFO of what I know so far again, and again she was the CFO of Daya Foods for 5 years, and I mean she
mhm.
must have seen these things, right? She must have reacted, and it's kind of weird that like they don't like if she's part of the board, she's the president, right? I mean. I'm not sure how it works in total, but I mean, yeah, he's the CFO. I guess he has the last word. But if you have a management and you have a president there, they must have some power, right?
Yeah,
Mm.
yeah, exactly.
So that
So that's just another, it just adds another layer of uncertainty is,
yes,
CFO, whenever the CFO resigns like that,
yeah,
usually, especially in small cap world, right?
yeah, and then the
This
threat
is kind of
for
what you expect though. Like, we just lived through a crazy bubble market where everything got heavily overvalued.
yeah,
That's why you see even good companies getting hit. Like, UiPath is one of Kathy Wood's stocks, right? It's a software company. They do some really interesting things with automating tasks with software. This is a stock that traded at 20 times revenue. And this is a software company too. And they have software margins. But look what's happening to their stock,
yeah,
yesterday. It was down 20 some percent
yeah.
after already being down 40 to 50%. So, if these companies get hit, VGFC has no chance.
Yeah, it's getting slaughtered.
Um,
Yeah, and then
yeah.
the risk for them getting delisted now, I think it's in July. They need to reach $1, and that's I guess that why there's a chance that they would reverse split. But the interesting part is, according to the laws in Nasdaq, is that you can actually ask for extension if you fulfill uh, other things that you need, other rules. Then you can
Mhm.
get an extension for up to another 6 months.
Yeah.
So, but obviously, looking at everything we've seen so far, I mean, I'm not sure how big of a chance that's about 100%. Yeah, it's about a doubling then, I guess. Or what's the
Yeah.
price now? I haven't. I, let's see.
It's
Yeah,
around
yeah,
50
it's
cents,
about
I
a
guess.
little more than 100%.
Yeah.
0.49 dollars. So that would be necessary. But if we look at specifics, then the actual numbers.
Mhm.
Um, I don't know if you have in front of you, or should I put it?
For which, like, their financials?
Yeah,
Yeah. I can bring that up here. Share screen. So, here's their quarterly revenue and net loss here.
mm,
So the 3 months ended, 2021, again, $4.3 million in revenue, $13 million loss. Again, some of that loss does come from that impairment of goodwill.
yeah,
So that's probably not going to repeat. Um, so that's one good thing about, maybe next quarter's numbers. So that number should hopefully increase. I'd
yeah,
like to see it increase.
yeah,
Um, and yeah, like, if they can continue to ramp, for example, gross margins, they didn't provide too much detail on where their gross margins might be. If they did, I'd miss that. But if they can get this to above 40%, and if they can show at least some evidence of trimming the cash burn,
yeah,
right, getting this operating loss down back to under single digits,
yeah,
that would show some progress and give some confidence. But they don't have they don't have much cash.
yeah,
Last I saw, they had, I think it was 21 million in
yeah, yeah.
cash.
21 million.
Yeah, that's not much. Um, their quarterly loss by itself in just Q4 was 16 million.
Mm,
So that's barely one quarter's worth of of operating expense,
no,
that they have in cash.
yeah,
So they need to figure out how to tame this SG&A here.
hmm,
And I would start by not paying bonuses, which they did very quickly last year.
Yeah,
They paid themselves $1.8 million. That's a lot.
yeah, there's a lot of discussion regarding that too. That I actually haven't gone in and seen it. I just looked at the forum, so this isn't vetted. I haven't gone through it. It's not research here, but there is a lot of people who claim that the CEO he takes out about $500,000 a month. A month, sorry, a year,
A year.
and that's I mean, to when you think about a CEO, then you're thinking, well, doesn't that sound reasonable? But considering how much they're burning in cash, that seems quite high, doesn't it?
Yeah, I'd say so.
Yeah,
That's high.
yeah,
I would take much smaller pay, but then again, like it's at that point, it's like, is that really going to make a difference? Maybe not, but because these numbers are in the tens of millions, right? Their
yeah,
total operating loss, $16 million. So even if he cut it down to 100,000,
yeah.
it won't really make a big difference, right?
No,
So what we need to see is significant operating efficiencies at their factories, so that way we can see a much better gross margin without necessarily increasing the SG&A
yeah.
much. That needs to happen very quickly, because they don't have much cash, so they will be forced to raise equity again.
Exactly, and
And
actually, they do talk about that that they might be doing that soon, but that they're like looking for ways to not actually dilute the stocks too much. But I don't know, considering the kind of balance sheet they have right now, I don't know if they would ever get any specific debt in with any reasonable interest rate.
no, no, I don't think so.
No,
I mean, they were paying their own CEO 9% interest.
yeah,
So if their own CEO is charging that high of an interest, what are banks going to charge,
yeah,
right?
exactly. So yeah, that's really interesting. But one of the reasons they've been burning cash like this, obviously, is because they had grandiose plans, right? I mean, bought a super huge facility. No, rented a super huge facility in the U.S., the Patterson facility,
Mhm.
and from their first facility, they were only producing about I think about 500,000 pounds of vegan meat a year, and then they actually made it more efficient to about 1 million. And then they got a new facility, the Rupert facility, I think, in Vancouver, and then that is supposed to actually be able to produce like 37, I think 37 million pounds per year. So that would be a huge difference, right? If they produce that much and sold that much. And then the Patterson facility in the US, about 97 to 98 million pounds per year, right? So what a huge jump. And I've been wondering also that, I mean, when you hear people talking about, you hear the management and they're really thrilled about that. And they were talking about how they're going to ramp up and start expanding like crazy in the US to some extent because a lot of the investors who went into this company, including me, I mean, I've just been doing this for a few years, so I was, improving as an investor as I, follow this journey, and then considering 2020 and 2021, what kind of multiples you would see in a lot of companies, and the hype when it comes to a lot of companies, right? Uh, Everything was about the growth story, not about the numbers. Value didn't matter anymore. Everyone thought that all growth companies were equal to Tesla, and so not so strange to some extent that a lot of us really believed in this company.
Yeah, and I don't blame them, because this is the one company that I think has the trifecta of a successful business model. Um, they have, e-commerce, they have retail distribution, and they have
Restaurants,
restaurants. Yeah,
yeah,
I like that idea.
mm,
I think it can work. May not change the world. It may not like rock the world,
mm.
but it could be successful. It could be a profitable company
And they
someday.
have their own butcher shop too. I think two now.
there you go. So
Yeah.
that's, I think there's a lot to like about this. But if you're an investor, I would not be invested in this right now.
Yeah.
There's too much going on with, management and very, very bizarre activities that it would be nice if they addressed it directly on the call.
Yeah.
If they did, that would change my view of them.
Yeah.
But you really want to see some evidence that, they're trimming the cash burn,
Yeah.
which they actually did say this.
Yeah.
That
They
they
came
do
out
expect.
3 weeks ago to investors stating that, and I know it states it here too, that they're downsizing. They're downsizing in personnel, and they're downsizing and the different facilities, I think, when it comes to the
Yeah.
different lines. But I'm not sure if they actually mention here in details. I don't think they say in detail what they're actually downsizing. So I'm hoping to hear that
They said
on
that
the call.
yeah, it says right here that they're pausing non-critical capital expenditures and significantly lowering general and administrative spending.
Yeah.
So if they
Yeah.
lower that, that would be great to see that if they can actually show that.
Yeah, considering their track record when it comes to projections, I'm guessing a lot of people are not going to trust them on that. We're going to have to
Exactly.
see more
So
than words.
yeah.
Yeah.
So I would wait for that. Remember, you're never gonna. One thing that small investors always. This is a mistake that I made myself, and I've learned this through experience. It's never too late to invest.
Yeah.
You don't have to catch the bottom of a stock. You're never going to be too late to get in on a company,
Yeah.
right? Warren Buffett bought Coke like 50 years after its existence, right? And he still made whatever multiples he did on that, like 20 times his money,
Yeah.
right? You don't have to be the first in,
Yeah.
right? And you don't have to catch the exact bottom.
No.
Wait for the numbers to improve and then get in, because suddenly you've actually lowered your risk. Even if the stock goes up from the price that you're watching it at, you've actually lowered your risk because
Yeah.
now the future is much more certain than it was before.
Exactly. And maybe you can, just for you guys who are not familiar with Mayur, you've been doing this basically professionally. What is it, 12, 15 years?
Yeah.
Yeah.
Yeah, it's for 15 years now, and I've learned my lessons. I've been in this spot before. I even made this mistake recently with Beyond Meat, right? I bought Beyond Meat at a very high price.
Yeah.
I learned my lesson. Don't jump in before the numbers look good,
Yeah.
right? You have to have some evidence that there is improving underlying economics here.
Yeah. And whatever
Um,
company you're investing in, and we've been talking about if you're really looking for a great growth company, like a 10 bagger, 100 bagger perhaps, the multiples traditionally is usually around 3 to 4, right? Uh,
yeah,
and then that's not enough. Obviously, you have to have a product that you believe in. You have to have uh, a really clear path to profitability, but also that you have to trust the CEO. You have to trust the management team. Because as we've
yes,
talked about, this is not you owning stocks. You should never think about it as owning stocks. This is you owning a company, right? So you're a part owner of a company. And if you're a part owner of a company, you want the people at the helm to be the right kind of people. You need to trust them, right? They need to be open with you.
yeah, exactly.
Yeah. So here then I've been thinking, people have been talking to me about this. They're worried about that they could actually go bankrupt. I mean, what kind of signal do you get here?
I think they're going to be able to raise capital. I don't see why not. So remember, they're still trading at 6 times revenue. That's still high. So even if they were to dilute at this price, they should be able to raise money. I mean, the market cap is $60 million right now. Um, you know, they're not going to be able to double the share count, but they should be able to, raise 20%. So that would be, around $12 million, maybe 18.
Mm,
So that will buy them a few extra quarters if they're able to control their costs.
yeah. exactly.
So again, that's not a lot of time.
No.
And this is again one of the things that annoys me the most about management. Where were they when the stock was up here?
Yeah.
And even while it was coming down, where were they at
Yeah.
$3, $4, $5?
Yeah.
If they fully diluted, up there, they would have plenty of cash runway to
Could
achieve
could
profitability
could
without
there
any
be
more.
like some rule that us newer investors don't know about that would have prevented them from doing that at that time? Like some deal or some reason why they didn't do that at that time?
Nope.
No.
There's nothing preventing companies from raising secondary offerings.
Right.
They can easily do this, and the bankers work quick because they know that they're going to get, paid. So they get things turned around quick.
Yeah. Yeah.
So whichever banks that they worked with to go IPO, they will be waiting right at the door for you to do a secondary offering.
Yeah.
No problems.
So again, this is a management decision that went astray, basically.
Yeah.
Yeah. So what I'm thinking here then, is there any light in the tunnel, so to say? I mean, could we see them now when they're actually downsizing? I'm thinking, and they're hopefully being able to control those expenses, and maybe it's better to start over and do it right. And even if they got delisted, which it does look like right now, right? That necessarily isn't going to make it worse right now, I feel. Anyways,
Yeah.
I mean, considering how much they've dropped.
I personally would be better. I would feel better if there's new management.
Yeah.
That's number one.
Yeah.
Number two is you need to see evidence that the cash burn is significantly trimming.
Yeah.
Number three, you don't want to see the cash burn trim at the expense of growth.
No.
So if they're scaling back, does that mean that they're going to scale back growth as well? So those are the top three things that I would want to see.
Yeah, they stated in the earnings, and they've stated that before too, that they're going to focus a lot more on profitability now. That top line is not going to be the only focus like it used to be. So, and again, I mean, the positive thing, like we said before, is that the price to sales looks way more attractive. But again, it's not enough, considering that there's so many other factors that is kind of unanswered. And doesn't make a lot of sense.
Yeah.
So that is obviously an issue. So, and one of my question before was, and you said it already, like, this is not a company that you would invest in at this moment, anyways.
No.
So
I like it though. I like the business model. I don't like management though, because of all these things that we've seen.
Yeah.
And the economics have not proven themselves yet.
No.
The gross margins are the greatest thing about this, though. The growth rate and the gross margins are very, very attractive to be, for a good investment. But, in a very crowded market and with questionable management, I'm not confident in this company right now.
No. But I'm thinking also that, then you probably don't know that one of their issues, because they used, my understanding, like millions and millions of dollars to promote through YouTube, but not promoting their products, promoting their stock.
I didn't know that.
No, and that's also a lot of criticism they've gotten, is that they, a lot, because usually you could see a lot of the different YouTubers that talked about them. Actually, it said like getting paid for this, basically, and so because they are big in social media, right? I guess they've gotten the impression that this is the way to do it, right? This is the way. I mean, this happened to another company. I think it was. Yeah, I'm not sure. Have you heard of Workhorse?
I have. Yeah. Yep.
That was also a crazy story there, and that got promoted quite a lot by different YouTubers.
Yeah, and that turned out to be basically a scam.
Yeah.
I think it was Lordstown Motors. That was another one.
Yeah, they were connected, actually, those two companies.
Nikola too.
Yeah. Yeah, yeah, yeah. That's a whole nother story there. So, so
Yeah,
uh,
so I didn't know that. That's a new thing to me. So if that's the case, yeah, I vote down management
yeah,
completely.
yeah, because I've always asked the question that why not promote the products instead, right? I mean, you want the products to
Right.
sell. Who cares about promoting the stock? Because the stock, like Warren Buffett says, if the company does well, sooner or later the stock will follow suit, right?
Hmm.
So and they basically done the opposite. So I mean, the products, my understanding, a lot of the subscribers I have, they've actually stated many times that that the products are really good. They taste really well. The question is the moat, though, when it comes to the product, because it's not the most advanced product or the ingredients. Almost whole food, which I actually liked. I was hoping that, like a year ago, that could be one of their strengths. That it was a their products are much healthier than both Beyond Meat and Impossible, for sure. There's no question. But one of the most healthiest uh, burgers I've seen out there and meat products.
Hmm.
But the problem
Yeah, their
is,
burger looks great.
huh? Yeah, they
Yeah, the
do.
burgers look great.
And a lot of people say they maybe don't taste like meat, so maybe they're more focusing on typical traditional plant based eaters, or
Hmm.
people who are going to care more and more about health. But the issue is again, well, what's so special about their product then, right? Because if you're just using wheat and beans, then really there's no secret to what you're doing. So,
Right.
but then it's
Yeah,
obviously about
and that's fine. I can look past that sometimes. Like, you don't necessarily have to have a secret sauce. I mean, you don't have to have like a moat on R&D, for example. You just have to have products that taste great, are healthy for you, and have very good brand appeal. So remember, there's Coke and Pepsi. There's nothing secret about how to make cola, right? But they do it well, and they have the brand
yeah,
behind it.
yeah. So
So and I like their marketing. Like, I'm just browsing their website. I love how they feature their products. I like their logo. I could see their restaurants doing well in
down
major
to earth.
cities.
You could see that they would, yeah, that they would appeal to millennials and Gen Zs for sure.
Yeah, like really tasty burgers,
Mm,
hot dogs. Like, this is like soul food, right? Everyone
mm,
loves this food. It's not like quinoa bowls, like, and nothing wrong with quinoa bowls, but
mm,
like, this is real food that everybody eats, but plant based.
yeah,
So like this burger right here, like that looks like a regular burger that you would get from many of the iconic burger places like Shake Shack and others.
yeah.
And this is something that would appeal, like marketing wise. Like, I could see a billboard that says, with a big juicy burger like this with cheese oozing out, and just have an arrow pointing to it, made from plants,
Yeah,
right? And just go viral with that type of marketing, kind of like what Oatly has done. Wow, no cow, right?
yeah, yeah,
So this could work. I mean, there's potential here, and this is the only company that has this trifecta business model.
yeah.
Tattooed Chef, I don't think, has the restaurant side of things.
No,
Beyond Meat doesn't have the restaurant side of things or the e-commerce side of things. Oatly doesn't have. They have restaurants, but it's through Starbucks,
yeah,
right?
yeah, like Beyond
Which
Meat,
is
then
fine.
it's yeah,
Yeah, which is fine,
yeah.
right? I don't think Oatly necessarily should get into the coffee chain business. I mean, that would be an interesting idea, but I don't think that would be the best use of capital right now.
No,
But this is a company that has all three,
yeah.
and good looking products and a good brand to put on it, and good packaging.
So
It could
basically,
work if they had competent management
mm,
and honest management.
yeah. So basically, what you're saying, yeah, the management is that even though if the management, everyone maybe needs to learn from the mistakes, but considering what's happened so early on, also where without actually been proving themselves, um, maybe it's too toxic. Whatever would happen to the management now is too toxic. They just need a fresh start.
Yeah.
Yeah.
I'd say I think the CEO should step down. I think we should clean house with the board. Start from scratch.
Yeah.
Get someone, an industry executive that could turn this into something.
Yeah. Yeah. I'm wondering, would I don't know, when you say the management, you mean like the whole board, or the people because I'm thinking again with Anna Silva, who's worked with a vegan company for so many years, and a CFO, which is a strong position, right?
Mhm.
And then I think his name is Tolbin from Amazon, who's worked for like 15, 20 years there. And actually, yeah, I think if you go into investors, if you saw that, uh, you have the name there. I actually have it in front of me here, so I don't know what I'm doing.
Mhm.
Yeah, let's see. His name is Bill Tolany. Bill Tolany here, who served as CEO and board member at venture-backed food startup, and he had leadership roles at Amazon and Whole Foods Market. So and he launched key initiative responsible for hundreds of millions of dollars in sales, right? So
Mhm.
so it's further down from where you're at now. So so that is kind of weird that they haven't actually, responded to that. If you click on the right there, so
Yeah.
yeah, so and then you have Bill Tolany there, yeah, exactly.
Yeah.
So so it's kind of weird. I don't know how, but independent directors and stuff like that, I don't know how it works in this company. It's not always they're working 100%, right? It could be like 10-20%, and they have other positions as well.
Yeah.
Mm. So they could
Yeah.
obviously,
Board members are always employed elsewhere.
yeah,
They just devote part time to just overseeing the company.
yeah, exactly. All right, guys, but I'm thinking that's it for today, and we might make more videos about them in the future, because yeah, like you said, it's an interesting growth story. It's interesting to follow them, and yeah, I'm going to interview the CEO in a few weeks from now. So I just wanted to see their financials first, and then I want to see their call that's coming up soon, right? And
Mhm.
hear what they have to say there. So I wonder though. After, I know he says that he watches my videos and has been following my story for about 1.5 years. We'll see if he's still up for it after this. Like, that's what we've been talking about. But yeah, we just try to keep it real, right? Because I mean, I love this company for about 1.5 year, and it's really sad to see what's happened. And hoping that I will still have the interview with him after this, because yeah, be interesting to hear his point of view, right, and his perspective,
Mhm. Yeah.
for sure.
Yeah. I love this branding right here. It looks great. It just needs competent management
Yeah,
to elevate it and to bring it to profitability.
definitely, definitely. All right, guys, but that was it for today. And if you are interested in talking to me and Mayur more regarding this company or other companies like Beyond Meat, Oatly, Tattoo Chef, to name a few, Baby F, so join us in our free Discord channel down in the description. And guys, if you want to connect with Mayur, either in the Discord or come to his um, Twitter account, which has a pretty big following now, around 16,000. So, and he talks about Tesla a lot, and Beyond Meat some, and Oatly, and then I think generally investments. So, so make sure to join him there as well. All right, guys, that was it. Thank you for today, Mayur.
All right, guys.
All right,
See you next week.
bye bye.